Good afternoon. This video is brought to you by White Wave Trading Strategies. Let's just take a look at a few of the features of today. This is long gold, short euro. Today just completed with this $30 break in the gold, the first correction that we've had since December when the gold bottomed at around 1040. And you can see that when we started out at the beginning of the year, we started up and it's just been a one-way street. This is really the first correction that we've had. And this is just the first, this is a 30% correction. It's a minor correction, which lines up with 1216 in the gold futures. The other big feature today was the bonds. They opened a little lower. They started up. They got a lot more. It took them a long time to gain momentum and lulled me to sleep. I was long, and I really didn't take advantage of the magnitude of this move. 163.17 is a major level in the 30-year bonds. This is a number where until we start closing above it, you know, it can consolidate. Once it does, it's going higher. Now, the only question is, you know, how much do we set back? And is this rally for real? So again, this is going to be whether the equities have topped today or they're just going sideways. So the first low risk area is basically the breakout, which is around 163 even. And we could go actually another 8 ticks lower than that and still be good. So it's about where the next bond break holds. And if they start closing back above 163.17, they're going to go for another point and a half and fill this gap at 165.20. You know, the Nasdaq's showing signs of strain at its 200-day moving average. It's been overbought. It's been trading overbought for days. All my indicators show that it's been overbought. Now the question is, can we get any price separation? They couldn't put in an outside reversal lower day, which means that there's still a lot of longs. You know, we've seen this before, even in the beginning of the year, where they go down to these number sets, they come back up, they run the weak shorts out, and then it's about what happens in Asia. If Asia starts down tonight and starts rolling over, then you'll get another bond rally and you'll get some more equity weakness. You know, one of the key features in this is the Aussie. You know, this is a risk-on currency. This totally gave it up today. Now the question is, the first time you see one of these patterns, you know, is it real or not? And if we start closing back over 75.50, which isn't much here, you see sustained price action back over 75.5 tonight, which is another 20 ticks higher, then you know, the board might go risk on, and the bonds will probably sell off a little bit more. But I'd kind of key off this area tonight just for something, just for a reference point. Let's take a quick look at the oil. The oil came down to the number set I thought it was going to trade at yesterday before it rallied, and then it finally gave it up on a Wednesday, trying to put it in a Wednesday low. You know, we'll see how this plays out, whether it can continue down all the way down to 39 cents and completely fill this gap, or it just stops in here and tries to come back up again. So it's just something to keep an eye on, but it took the oil weakness in the inventory numbers today to get the bonds to catch a bid. So it's just something to think about when you're looking at this. You know, the oil's kind of neutral to me. So we'll just have to see how much price separation we get here in the equity indices. As long as we're basically closing under 44.02, you know, I'd almost rather sell the rallies in the equity indices and give it a whirl. You still need back over 2031 here in the S&Ps to think this is a break to nowhere, and then maybe it starts coming back up. Otherwise, you can probably target something closer to the 200-day moving average, which is another 15 points lower. That's all for tonight. Thanks for listening. Good luck and good trading.